Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action in the markets. Today, we've got a lot to unpack with geopolitical tensions, inflation concerns, and some intriguing moves in major indices and individual stocks. Let's break it down for you long-term investors while keeping an eye on short-term waves that could impact your strategy. First up, the big picture is painted with some serious geopolitical brushstrokes. The fragile ceasefire between the U.S. and Iran has markets on edge. Despite a 2-week truce, there's skepticism about its durability, especially with the Strait of Hormuz still throttled, pushing oil prices back near the $100 mark. This uncertainty is rippling through energy costs globally, with leaders like the British Prime Minister expressing frustration over how these tensions swing energy bills. For us long-term folks, this is a reminder to watch energy exposure in your portfolio. Volatility here could be a persistent thorn. Let's zoom into the major indices to see how they're reacting. The Dow Jones managed a solid gain today, up over 0.5%, while the Nasdaq led the charge with a near 1% climb, showing tech's resilience amid the chaos. The S&P 500 also posted a respectable increase, and the Russell 2000 wasn't far behind. Interestingly, the VIX, our fear gauge, dropped significantly, suggesting some easing of investor nerves despite the headlines. For your long-term strategy, this mixed resilience signals that broad market exposure via index funds remains a steady play, even if short-term dips loom due to global risks. Speaking of the S&P 500, it's worth noting that while we're seeing gains today, some analysts are cautioning against buying the dip right now. Macroeconomic conditions are worsening, with inflation risks and slower growth on the horizon, as flagged by the IMF. So while the index looks strong in the short term, long-term investors might want to stay selective and not chase every rally. Over on the Nasdaq, tech continues to be a bright spot for many, even with broader market jitters. Retail investors are reportedly getting back into tech stocks as bearish sentiment cools, per recent surveys. But heads up, software stocks are facing what some call a full-fledged breakdown, testing key support levels. If you're holding tech for the long haul, this could be a moment to reassess weaker names in your portfolio, while short-term traders might see a bargain if support holds. Now let's check out the big winners among large caps. Intel surged nearly 5%, riding a wave of optimism around its foundry services and new AI chip deals. Advanced Micro Devices also had a strong day, up over 3%, continuing its solid yearly performance. Spotify and Corning were other notable gainers, showing strength in their respective spaces. These moves highlight pockets of opportunity for long-term growth, especially in tech and innovation-driven sectors. On the flip side, we've got some heavy hitters taking a hit. Tesla dropped over 5%, weighed down by disappointing delivery news and concerns over margins with plans for a cheaper SUV in the works. ASML and GE Aerospace also saw declines, reflecting broader pressures in their industries. For long-term investors, these dips might be worth watching. Tesla's strategic shift could pay off down the road, but near-term volatility is likely. Among the market movers shaking things up, Nvidia continues to dominate trading activity with a modest gain, while Amazon saw a slight dip despite big AI investment news. Palantir and Netflix also caught attention with positive moves, reflecting ongoing interest in tech and streaming. These names are often at the forefront of market sentiment, so for your long-term holdings, keeping tabs on their trends can offer clues about sector health. Looking at the most active stocks by volume, Nvidia and Tesla are unsurprisingly leading the pack, showing how much investor focus remains on these giants. Intel also saw heavy trading, likely tied to its recent gains and strategic updates. American Airlines and Plug Power were also buzzing, though with mixed results. High volume often signals short-term noise, but for us long-term players, it's a reminder of where the market's attention and potential overreactions lie. Shifting gears to earnings, we've got a busy week ahead with some heavyweights on deck. BlackRock is set to report, and expectations are high for a strong showing. Delta Airlines is another name to watch, especially with fuel costs in focus post-ceasefire. CarMax and Constellation Brands are also up, offering insights into consumer and discretionary spending trends. For long-term investors, These reports can signal broader economic health. Keep an eye on guidance over raw numbers for clues on future stability. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your portfolio. Over the past week, some large caps have really shown. Garmin led with a massive 21% jump, while Lumentum Holdings and AppLovin posted impressive double-digit gains. Shopify and Occidental Petroleum also made strong moves. These weekly winners underscore where momentum is building, something long-term investors can consider for rebalancing or adding to growth positions. Conversely, the past week saw some big names stumble. Genuine Parts cratered over 20%, while Rivian and Blue Owl Capital took significant hits. Okta and Bridge Biopharma also lagged. For your long-term strategy, these declines might be a chance to scoop up quality at a discount, but do your homework on why they're down. Some could be structural, not just cyclical. Sector-wise, industrials topped the charts this week with a nice uptick, followed by consumer cyclical stocks showing decent strength. Energy also had a standout performance, likely tied to oil price swings. For long-term portfolios, these sector moves can guide where to overweight. Energy's volatility might be a tactical play, but industrials could offer steadier growth. On the weaker end, healthcare took a noticeable step back over the week, with utilities and financial services also lagging. These underperformers might reflect broader concerns like inflation or policy risks. Long-term investors could see this as a chance to revisit defensive holdings, especially if you believe in a rebound story for healthcare. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate both the short-term noise and your long-term wealth-building journey. Don't forget to stay engaged with MarketSnap for more daily summaries and in-depth SWOT analyses to keep your investment game sharp. See you tomorrow for another update.